Let's start to talk through how we take these trades, what we're looking for, some of our favorite products. So what I'm going to do is we're just going to start out with Facebook here today. I know it's really popular. I know a lot of people trade it. And what I want to do is touch on what makes us different. There's two main features to this active swing trader system that make it very different than anything else that you're going to find on the market. Okay, number one, we don't do anything with time-based charts. Okay, so if you're somebody that uses a daily chart or weekly chart, an hourly chart, okay, those can be fine in certain cases, but what I want you to do for the next couple minutes is set it aside. Because what we use range charts, and we focus strictly on price action. So if you look up in the upper left-hand corner of this chart, you're going to see Facebook, momentum bar of 1. What that means, when I click on any bar or candle on the chart, the difference between high and low is always going to be $1. Doesn't matter if I click on a bar back in early October or today's session, the difference between high and low is always going to be $1. Now that could take 2 minutes, it could take 2 days for that bar to form. What that allows me to do is really stay fine-tuned to the current conditions. When you're looking at a daily chart, I've mentioned this a number of times here lately, especially in these types of conditions, if you're using a system that's waiting for the close of a bar or a candle to give you a setup, you're potentially missing out on hundreds of points here. With the markets moving so quickly, we're making 300-400 point moves intraday. You're potentially missing out. By using range charts, we're able to react quicker. We're able to get in and out quicker. Okay, during that same 1 day period, we could get 3 or 4 bars on a range chart. Okay, a lot of times I hear from traders, Mike, I really need to use end of day charts. I don't have time to come in during the day and check these charts. Well, I'm going to show you how we're able to use some different tips and tricks and tools to get in and out very quickly. Now, why did I pick a range chart of 1? It seems like, hey, it's kind of a random number. How did you pick that? There's a formula that we look at the end of every month. We look at it once a month, and that formula tells us what range setting we should be using for the following month. So as market conditions change, as ranges expand, okay, we're going to use a larger range setting. If things start to contract a little bit, if things start to slow down, we'll use a smaller range setting. That allows the system to self-adjust to the changing market conditions. You're not using a system that works well in certain conditions, but then as soon as the market changes, the system completely falls apart. Okay, that used to drive me nuts. Now we've built the different features into the system to help prevent the system from breaking down. Now the second feature for me, and it's just huge, it makes this system so different, is our custom trade calculator. Like many other systems out there, we have proprietary indicators. Okay, we have a certain sequence of events that we're looking for in order to get a setup. The difference is we've programmed everything into a calculator, so when all of our criteria is met, we get a setup to print right on the chart for us. We get our entry point, which is this plus sign right here. We get our targets, which are the green dots above. We get the stops, which are the red dots below. So now all of a sudden, I have a roadmap to follow. No longer am I stuck coming in and saying, hey, should I get in here? Should I get out? I need to draw trend lines. I need to put 10 different indicators on the chart trying to determine when to get in and when to get out. This allows me to come in, take a look at that roadmap very quickly. This is the secret formula for getting in and out in 20 minutes a day or less. Okay, because everything's outlined for me. Okay, a lot of the issue that I have with most proprietary indicators, you may have access to those indicators, but there's a lot of discretionary decisions involved. Okay, it's very difficult to trade that system the way it was intended to be traded when you don't have that calculator in place making everything crystal clear for you. So in this case, we're going to look at the most recent Facebook trade that we just closed out. You'll notice that all of our criteria was met for a long trade. So we got this entry point to print. That entry point, it prints it in real time. There's no going back and saying, well, I should have gotten in there and I should have gotten out there. Everything sets up for us. Everything prints for us in real time. Now, as soon as price action, as soon as Facebook rallied up to hit our entry point, we could actually buy the shares of stock. If we wanted to, if we didn't even want to mess with the option side, we could go in and buy 100 shares of stock. Problem I have with that is at the time of this setup, it was a $72 product. Okay, that's just going to tie up too much capital to put on any type of significant size. Okay, so what I did is I went in and I bought the October weekly 72 call for $2.40. For those of you that are new to options, what that does, for $240 per contract, it's giving me control of 100 shares of Facebook stock at $72 a share for 1 week's time. Okay, Facebook, as you can see, has rallied up to $80 a share. If you still are holding on to that weekly 72 call, you have the right to buy 100 shares at 72. You can buy at $8 cheaper. Okay, so as a result, as Facebook continues to rally up, my call option also increases in value. Now, we were fortunate enough here to hit that second target. Okay, I sold out of my position. I booked a $190 profit or a 79% return. I absolutely love that. Okay, we were in on the 15th, we were out on the 20th. Okay, so we're in the trade for 5 days, but I'm only checking up on the chart for less than 20 minutes a day. Okay, that's huge. I mean, we're talking about $240. We're controlling 100 shares. I mean, shoot, a couple weekends ago, I took a friend out. We played golf. By the time I paid for 18 holes, lunch, dinner, and some drinks, I'm sitting at $250. Well, for that same cost, I'm controlling 100 shares of Facebook stock. Okay, just goes to show you don't have to have a huge account to take this trade. Okay, you can trade it with a small account. You can trade it with a single contract. As you grow your account size, add a second, third, fourth contract. If you're trading a larger account size, okay, there's no reason why you can't come in and buy 20, 30 contracts. That's why I love the options market. They're the most liquid products in the world. You're not limited at all based on size. You can trade as small or as large as you want and not have any issues getting filled. Okay, coming from the futures side, that used to be a big issue. Liquidity used to be a big issue depending on the market that you were trading. You could only trade a certain amount of size before you had difficulty getting in and out of trades. You don't have that issue here on the options side. Okay, also I want to point out the reason that calculator is so powerful. If I were to turn it off here for a second, all of a sudden you look at this chart and say, okay, Mike, if I get in right here, okay, my guess is as soon as this market starts to roll over, if you're like me, without that calculator, you're probably starting to second guess things. You're probably starting to say, well, the market's starting to turn here. I might want to jump out. Well, there's no panicking here because I have that calculator in place telling me exactly where my stop is at. Worst case, if it hits my stop, I'll jump out. Okay, I'm not going to be dumb. I'm not going to be stubborn. Let's keep our losses small. But in this case, we never threaten to stop. Okay, and because I just stayed patient, I let the trade work out for me, and I hit full target. Really nice 80% return on my money. Okay, let's take a look. It works great on individual stocks. What about some of the ETFs? I really love ETFs, especially for those of you with smaller account sizes. Just gives you an easier way to diversify. Now all of a sudden you're trading a single product, but the price of that product is determined by a whole basket of stocks. So I love ETFs. Now, in an earlier webinar, we talked about this long trade where we booked a 46% return. Really nice trade, right? Well, we just had another one that we closed out. Okay, what I want to point out, it does not matter if you're looking at a stock, an ETF, an index product. The system remains the same. You still have that custom-built trade calculator that tells you exactly when to get in and when to get out. The only difference here, if you look up in the upper left-hand corner, now we're looking at a momentum bar of 0.69. So every bar here on this chart represents 69 cents of price action from high to low, which when you step back and think about it, it makes sense. Okay, we're going to use a different range setting depending on the product that we look at. If we're looking at a product like Google, for example, $500-600 product, well, a $1 move on Facebook is not the same as a $1 move on Google. So we're going to use a different range setting. That's why that formula that we look at the end of every month, that's why it's so powerful. There's no guesswork. It tells us exactly what range setting we should be using. Now, once my chart's set up, the calculator works the exact same way. It told me exactly when to get in. And we had an entry point here at 163.71. We initially triggered in late in the day on the 17th. Okay, if you missed it initially for whatever reason, you're off in a meeting, you're working, you're playing golf, doesn't matter. We had a second attempt to get in here on the 20th. So plenty of time, couple of opportunities to catch this trade. Now, I went in and I bought the October weekly 163 call. tied up $206 of capital. So again, a couple $100. I'm controlling 100 shares of the Dow ETF at a 163. Now, because DIA rallied to the upside, my call also increased in value. Once I hit that second target, there's no guessing here. Okay, as soon as I hit that second target, I'm out. I'm not trying to hold on for the home run trade. As soon as that second target is hit, I exit my trade. And I booked a 75% winner, $150 profit here. Okay, again, if you're working with a larger account size, it's very important when you're trading options to talk about percentages. Because $150 may not seem like a lot of profit, but when you're only tying up $200 to begin with, that's huge. I mean, you start trading 3, 4, 5 contracts, the numbers definitely start to add up quickly. Okay, now I could go through a ton of results here today. We'll look at a few more charts here in just a second. I've talked to a number of you here over the past couple of days, and a lot of good questions have come in. Probably the most common, there's 2 common questions that I get. We're going to cover both of them. Number one, I talk about getting in and out in 20 minutes a day or less. What does that look like? How am I able to do that? Well, we have the calculator here, which does a lot of the hard lifting for us. My schedule typically looks like this. I like to come in once at the open, typically for 5 to 10 minutes. That just, the market's very active. That allows me to get my orders in place, get my trade alerts or my price alerts in place for the day. Then I like to come back around lunch. Then I like to come back once in the afternoon, typically around 3 or 3:30. When I come in around lunch in the afternoon, typically that's for 3 to 5 minutes at a time. It's very quick. A lot of times I'm just coming in, quickly taking a look at the chart. Hey, is there anything new there? Okay, if I'm in any trades, do I need to make any adjustments to any stops? Or do I need to exit any trades? That's what my schedule typically looks like. Now, it works for me to come in 3 times a day. May not work for you. If you can't come in 3 times a day, not a problem. Okay, let's say you can only come in the morning and once in the afternoon. That's okay. Okay, it's very flexible because we're not day trading. I don't have to be focused on every tick throughout the day. We're swing trading. My average holding time on these positions that I'm showing you, anywhere from 24 hours on out to 2 weeks. Okay, that's my definition of a swing trade. Now, some of the tools that we can use in order to do that, we've talked about contingency orders or conditional orders. What we can do in most broker platforms, let's go to a product. Let's try to find one here that actually has a setup. I've got to try to remember which one gave us a setup that we were working on. All right, let's go back to EWZ. Okay, so we're in this short trade. We're actually hitting the first target, and notice my stop came down to break even. The calculator knew how to do that for me, right? Okay, it's already programmed in. So I know my stop's down to break even. I know my target, my full target's down at 39.06. What we can do, if we're coming in to do our lunchtime update right now, we can actually put in a conditional order inside of our broker platform that says, hey, if we sell off this afternoon, if we get down to hit 39.06, if that stock price is hit, I want to exit out of the put position that I put on. So if I bought a put option to play the downside, we can place a conditional order that says sell out of the put as long as the stock hits 39.06. I have many students that use those types of orders. It's great because you can come into the lunchtime update, get that order in place, and not have to worry about it this afternoon. You're not stuck wasting your afternoon seeing, hey, do we sell off or not? You can do the same type of an order for the stop. Okay, the stop has been moved down to break even. If we rally up this afternoon, if 41.13's hit, we'll jump out of the put position. You can place that order ahead of time. You can also place price alerts as well. So inside of TradeStation, you can do this inside of just about any platform. I like to use horizontal lines, and I like to attach alerts to those lines. Okay, and those alerts, if I'm out of the office, I can have those alerts texted or emailed to me so I can get them on my phone. So let's say I'm headed out this afternoon. I'm on a meeting. Actually, better yet, I'm probably going to be on the phone this afternoon with some of you, which is great. So if I want to have those price alerts in place, I'm going to go ahead and put them slightly in front of my stop, slightly in front of my target. That way, if those prices are hit this afternoon and I'm not looking at the computer, or if I'm out of the office, I can have that alert sent to my phone telling me, hey, it's time to come in, it's time to manage the EWZ trade. You're approaching a stop or a target. That way I'm able to move on with my day, get other things done. I probably trade more from my mobile platform now than I do from my actual desktop. Okay, for those of you again that think you're stuck trading end of day charts, it's not the case. There's so many times where I'll go ahead and have all my charts on my computer in my office. I'll go out to a meeting, I'll be on the road for whatever reason. There's different software that you can use, LogMeIn, TeamViewer, where you can actually log into your computer remotely. Okay, so you can actually log in from your iPad or your phone, take a look at your charts at home in your office and see, hey, is there any trades that I need to take? Do I need to make any adjustments? That way, again, it just frees up your lifestyle. Okay, I find it hard to believe. I'm super busy. Okay, you might be working a full-time job, working just a ton of hours. I find it hard to believe that you can't find 3 to 5 minutes throughout the day, a couple of times, just to log into your computer at home, check your charts. Okay, we're not talking about a huge time commitment here. So if I'm coming in to do my update, here we go. EWZ, I have my alerts in place. If I want to place a conditional order, I can do that, and I'm ready to go. Really as easy as that. Let's start to look at some of the other names. Let's take a look at Facebook. Does the calculator have any setups printed for me on the chart? No, there's nothing for me to do this afternoon. At this point, I just move on. I can take a 5-second look at this chart and know that there's nothing for me to do here. Okay, let's take a look at the Dow. There's nothing for me to do. There's no setups printed by the calculator. I'm just waiting for something fresh and new to develop. So again, take a quick 5-second look, move on to the next name. Okay, what about Priceline? Well, we have a new long setting up. If you're trading Priceline, okay, let's get an alert in place. We'll set an alert just in front of that entry point. So if that alert is hit this afternoon, I know it's time to come in and enter my order. If I wanted to place a conditional order right now, I actually could. I could set up that options trade and say, hey, if 11:44.27, which is the system calculated entry point, if that is hit, go ahead and enter the position. We can already set up place that order and move on with our afternoon. So literally 10 seconds here on Priceline and we're good to go. Move on to the next name. Okay, what about the S&P? Okay, there's no new setups here. We're just waiting for something new to develop. We've had a couple of really nice winning trades here lately. So as you can see, I've worked through 4 or 5 names here. Yes, I'm explaining it in detail to you, but when I come in and do my lunchtime update, my watch list might be 5 to 10 names. This is how I'm able to come in and really in 3 to 5 minutes max, come in and work through all my charts, place my alerts, place my conditional orders, and then move on with my day. That's really powerful for me. Okay, so again, just wanted to point that out. I know that comes up a lot. How much time do I have to invest in this? What times a day do I have to come in? It's flexible. You don't have to be stuck there all day. The next question that I get is, what's the account size needed, Mike? Okay, if I've got a few $1,000s to work with, can I do this? Well, I just showed you earlier on Facebook and the Dow ETF, and when we can go over to, we're on the S&P chart. We're talking about $200 to $300 per trade. Okay, taking one contract, which that's the example I've used in all of our webinars here recently. Just trading one contract, we've showed you literally thousands of dollars of profit. Okay, now nothing says you can't come in and add a second or third contract, but you can see there's a lot of opportunity here to get in for a couple $100. Now, are there high flyers that are going to tie up more capital? Sure. We can go over to Priceline, for example. We just closed out of a full winner here, and we put on a call spread. Okay, we bought the November 1065 1105 call spread. So we bought the 1065 call and we sold the 1105 call to hedge it. So what that allowed me to do is to lower my cost. So instead of just going out and buying a long call, which would control the upside, I also sold a call at the same time that lowered my cost. So now all of a sudden I'm able to get in. I'm controlling 100 shares of an $1,100 stock, and I'm doing so for just under $1,800. Okay, so if you do have more capital to work with, you can trade these high flyers. Okay, so you're not limited by the capital that you have to work with. If you're working with a small amount of money, obviously we want you to start out slow, control your risk, grow your account slowly. Most people, they come in and regardless of their account size, they're trying to go too fast. If you're looking for consistent growth over time, those are the people that are going to be successful, and they're going to be around for the long haul. So on that call spread, just since we're on this chart, we were able to close it out. $575 profit, 32% return. Really nice trade. It was a very safe trade with the market so active. On Priceline, I decided instead of trading the weekly options, I went out and traded the monthly options. Okay, I put on a call spread instead of buying the long call. I took a very conservative approach to this trade. Did I give up some profit potential? Yes. But if this trade didn't work for me, if it ended up stopping out, I would have reduced my risk considerably. So remember, going back to the 4 bullet points, I like the flexible products. Just because I get a long trade does not mean I have to go in and buy a call option. There's different things that I can do. There's different types of option strategies that I can use to control my risk. That's a huge selling point for me. I can be as conservative or as aggressive as I want to be. Okay, you can't do that in the futures market. If you're trading the Russell E-mini, for example, well, what can you do there? You can basically buy or sell the contract. I mean, that's all you can do. Okay, now all of a sudden with options, on this long setup here, setting up on Priceline, I could probably cover 3 or 4 different ways that we could take this trade right now. Okay, that's the powerful part of options. Now, why do I choose the weeklies over the monthlies in certain cases? Why do I choose the long call over the long call spread or vice versa? We cover that in our training. We have a whole checklist that we go through. So that when you get this set up, when the system prints the setup on the chart, there's no guesswork. Okay, you know exactly what criteria to look for. You know exactly what option to put on. Everything's very crystal clear. Okay, now some of you were able to download the free reversal system. I was in one of our earlier webinars. I just wanted to give a quick update on a couple of these trades. The Dow ETF, we were able to close out of a full winner on the upside. Okay, so this last trade that was closed, we booked a full winner. We bought a call option here. We bought the 159.5 call for $2.98. So again, just under $300 per contract. We're controlling 100 shares. We hit full target, booked $130 profit, a 44% return. Really nice trade. We're in on the 16th, and we're out the very next day. 130 bucks a profit, 44% return in less than 24 hours time. That's doesn't get much better than that, right? Now in this short setup, we're still short. Okay, I would love to say that every trade's a full winner. That's not going to happen. Okay, in this trade here, our stop's at 167.11. We got up to a high of 167.10 today. Okay, so we're barely holding on, but you know what? The stop's in place. There's no panicking here. We're just going to trust it. We may roll over to the downside over the next couple days. Wouldn't be surprised at all if we come back in and we hit full target. That's the power of the calculator. Everything's outlined for us. What do we look for long term? Ideally, I'd like to see a 65% win rate. Okay, but I'm less concerned with the winning percentage. I'm more concerned with our reward to risk ratio over time. I want to make sure our winners are larger than my losers, so I don't have that pressure there to win 90% of the time. A lot of systems out there that promote 90% winners, what they don't tell you is their losers are so large it's wiping out a whole series of winning trades. We're trying to put the odds in our favor. So in theory, we could only win 55% of the time and still make money. Now, fortunately, the system actually combines a good win rate with a good reward to risk ratio, and that's the formula for success. So we've had a nice move on the Dow. We also gave you access to Google as part of the free system. We had a full winning trade here. We talked about taking this long setup with a call spread. So we put on the 525, 540 call spread, $705 per spread. Gave us control of 100 shares of a $500 stock. That's that great leverage. All right, so we hit full target, booked a $315 profit or a 45% return. Okay, really, really nice trade. Now we're in the short, very similar situation to the Dow. Okay, we're barely holding on. Our stop's in place. If it stops out, hey, we're going to have winners and losers along the way. Okay, that's just part of trading. So obviously, I mean, the system's produced some really nice results here lately. The market's been all over the place. It's been perfect for us. I could go on and show you some really great results. I know I'm running a little bit over on time.